Good morning, everyone. Well, risk measures for the U.S. have declined, and as a result, the dollar is stronger against most currencies at the European opening Monday. U.S. investors were apparently encouraged on Friday that the House voted to give back pay to U.S. government workers who are furloughed by the government shutdown. That will greatly reduce the economic impact from lower incomes. Investors also took heart from private comments by House Majority Leader Boehner that he wouldn't allow a debt default. Although, as U.S. Treasury Secretary Lew pointed out over the weekend, Boehner didn't want to shut down the government either. Reports that the Democrats have been examining the House of Representatives rulebook to see if they can present a bill to fund the government without the cooperation of the majority party leadership apparently sparked some optimism as well. As a result, U.S. stocks closed 0.5% higher Friday. The yield on the T-bill maturing on October 31st declined a bit, and the one-year U.S. CDS rate fell to 45 from the high of 64 on Thursday. That caused some short covering in the dollar against most G10 currencies. Now, while the decision to give back pay to government workers will reduce the economic impact of the shutdown, I'm not sure it's a positive development. On the contrary, it seems to me to be part of the Republican strategy to fund just enough of the government to take pressure off of them while they wait for the debt ceiling deadline. I think in that it should therefore be seen as a negative in my view. But with many assets near key levels, the U.S. 10-year bond is close to 2.60. Dollar yen is at just a little bit over 97 the figure, and dollar Swissy is just a little bit over 0.90 the figure. The market may have reached some equilibrium for now, and it could take a further push of some further negative news to push it through those levels. Without any further negative news, with things just remaining as bad as they are, we could be in for some range trading and even some further profit taking on short dollar positions until the next downward lurch. Nonetheless, frankly speaking, the outlook remains negative to me. The weekend press gave me no reason for optimism, and with the S&P 500 futures opening in Europe down 0.6%, I wonder just how long the dollar is going to remain stable. There is not much impetus to trading during European time. The only economic indicator out in Europe is the Eurozone Centix Investor Confidence Index for October, definitely a second-tier index. In the U.S., consumer credit for August apparently will be released. The forecast is for a rise to $12 billion from $10.4 billion, but speaking frankly, will anybody be watching the U.S. indicators? For more analysis, including the technical picture, please check out our research at www.ironfx.com. Like us on Facebook, follow us on Twitter, and subscribe to us on YouTube to keep up to date. This is Marshall Giller, head of Global FX Strategy at IronFX, wishing you solid trading.